Good evening, everyone, and thank you so much for being here. It means a lot to us. As you might have seen from our announcement 3 weeks ago, just over 3 weeks ago, we had a fantastic year. We had a record year and exceeded the market expectations. In today's presentation, we are going to talk about our financial year results for 2024 and also our future growth plans with you. So I'm just going to kick it off. We are a technology-enabled labor supply company operating in the UK infrastructure sector. This is our board. I'm the CEO for Hercules Site Services. Today I'm joined by our CFO, Wheatcroft. As you can see from this slide, we have got a really good board, very strong, well-respected board with great blend of experience in infrastructure, financials, banking, PLC, governance, and even starting and running a AIM-listed company. Together, we believe that we can grow Hercules even further. These are some of our achievements for the 2024 record year. Again, fantastic year, and we are very proud of it. And we again exceeded the market expectations. Our revenue increased, adjusted EBITDA, PBT, and EPS all increased materially. We have done that through our two divisions, labor supply division as well as our civil projects divisions. When you might remember as well, over a year ago, we acquired a company, our first acquisition that we completed, a company called Future Build Recruitment. They are a white-collar labor staff supply company to the infrastructure and construction projects. So a great addition to our successful current labor supply company. What we have been doing, we have been cross-selling between the companies, and we have been also cross-selling between the divisions as well. So it has been growing, and it contributed around £1.5 million over the last year to our revenue. With regards to the additional growth initiatives, we started our labor supply in the rail sector over a year ago, and we won a contract with Balfour Beatty. They are one of the biggest construction companies in the UK. So we've got a 5-year contract with them. Over the next 5 years, we'll be delivering a workforce for them, and we have been adding on to our client list. And we believe that we'll be growing over the year or so in the rail labor supply sector. We also started our construction academy over a year ago. We trained 1,000 people, which is amazing. As you know, there is a skill shortage in the UK with regards to infrastructure work, and we have got our training academy in Nuneaton. It's a deprived area, and we have been delivering upskilling and cross-skilling our workforce, but also we want to make sure that we meet the current demand and the future demand of workforce being available to put on in the infrastructure projects over the next 10 plus years. So it's a huge thing for us, and we completed that over a year ago. With regards to the 2025 financial year 2025, with a strong balance sheet, which Paul will talk about it, we successfully raised £8 million in September, 3-4 months ago, which is great because we'll be growing organically anyway, because we also started a really good quarter of this financial year, so we'll have another record year. But the reason that we raised this amount to be able to acquire labor supply companies in the infrastructure sector. So we want to keep growing by acquiring companies and turbocharge our growth. So that is the plan. This slide is about our record financial performance over the last year. Revenue is up 28% to £102 million. Adjusted EBITDA is up 34% to £4.7 million. Our adjusted PBT is increased 43% to £2.6 million. And our EPS is a very good increase, 173% to 3.5p. Paul will talk about our cash generation in the year, and we are only going on the London Stock Exchange for over 3 years. We have been paying dividends since we got Hercules IPO'd, and we will be paying dividends this year also, 1.72p per share. This slide is about our business overview. You can see some of our blue chip clients that we work for in the infrastructure sector. As I mentioned before, we are a labor supply company, and that is our main business. And we operate work for our blue chip clients in the infrastructure sector and complemented by our construction services division. Labor supply is our core business, and it's a significant part of our business. It's our main revenue supply, and as you can see, 83% of contribution comes from the labor supply. And this is growing every year, so we believe within 5 years it will be 95% of our overall turnover. Under the labor supply division, we supply blue collar and white collar staff into the highways, rail, nuclear energy, utilities, power and energy distribution, and other infrastructure projects. And under the construction services division, we carry out civil projects in the water industry, and also we operate our construction academy. One of the biggest USPs we have got is that we can supply all of these services to our clients by cross-selling opportunities under the same umbrella. Our clients really like that, and we have been building our client base over the last 17 years, adding our clients into our client portfolio by cross-selling opportunities. This is our history, revenue growth. I started Hercules in 2008 from a family spare bedroom, and we have been growing every year, apart from the COVID year, as you can see. We have achieved several milestones over the last 17 years. Some of them, HS2, winning the HS2 labor supply contract on the Birmingham section for our client Balfour BT Vinci joint venture. It has been going really, really well, and we have been growing in that section as well. With regards to the London Stock Exchange, we IPO'd exactly 3 years ago today, 4th of February. So me and Paul will have a couple of drinks after here to celebrate. So we are very proud to be on the line. We are aware that the market hasn't been the best because of the macroeconomic situations and other problems. But what we have been doing, we have been under-promising and over-delivering, and we believe that our share price is catching up with it, and hopefully it will get there. Again, we believe that AIM platform is the right platform for us to be able to grow, because we've got ambitious plans, which we are going to share with you later on. 2023, we acquired our first company, Reportable Recruitment. We have been integrating over the year. Great company, as I mentioned, white collar staff to the construction and infrastructure sector, which is brilliant, great addition to our current blue collar labor supply. The last 100 million pound revenue, we broke that, which is brilliant. I'm very proud of it. And just to bring your attention to our compound annual growth rate over the last 3 years is 48%. So we have been growing in the right direction, and we are very proud of it. If you can look at the top right of this slide, section of this slide, some of the government investments coming up in the infrastructure sector, and they are nuclear energy, power and energy distribution, water sector, highways and rail. As you can see, with these projects coming up, as well as we are working for these blue chip companies, and we are on the AIM market, we believe that we'll be growing organically over the next 10 years. Plus, we are thinking of acquiring other companies as well, which we'll talk about it in details under the M&A section. Paul, thank you.
I'll try not to bore people with numbers too much, but as Brusk said, we've got to this 100 million milestone. Boy, is that exciting. We've all worked so hard over 3 or 4 years to use what we got from the IPO to build relationships with the city to help us get there, and we got there. Fantastic. Those change percentages year on year, what Brusk has already highlighted on the main slide. A couple of things worth pointing out here. I think we've done really well with overhead control. 5 years ago, we were a very small private company, knowing that huge change was going to come along, lots of opportunities was going to come along, so much work in the infrastructure sector, and we weren't really of a size to cope with it. So what did we do? Well, we built ourselves into a company that can cope with it, whether it be systems, whether it be processes, whether it be management levels that we needed. We did all that, and our overheads went up. And I've done these presentations for the last few years, and I've been explaining to people how overheads kept going up and why. Well, hey, we're now getting some payback. Overheads are now basically not moving, and we've probably got that for 1 or 2 years. Then as we go into the next stage of growth, those overheads all need to start going up again. But that's the game that we're in. It's the step changes. We have an awful lot of people on sites, and every time you get a big increase in that, you need a bit more overhead in the centre to be able to make it happen. Because people make this happen. People make this happen. The other thing that's worth interesting to talk about here is the nature of our share price. We're currently about just shy of 50p, yet we're clearly undervalued. The consensus of valuation of the analysts is that we should be about 75, 80p. And we've been like this actually for quite a few years. I think the Ukraine war, the aftermath of COVID have all contributed to that. And we've been affected like many companies have. But what we can do is keep delivering, and that's exactly what we've done. I think this is our 3rd record year on the trot. So what do? What's the main part of our business? Labour supply. As Brusk has said, we've got a big increase in the labour supply turnover in the year. This has all come, with apart from a very small amount from the Future Build acquisition, it's all come through organic growth. We have a strong project pipeline. We know what all our major clients have. We've got access to their portals. They tell us when the work is coming up. Because we're on their frameworks, we're a strategic supplier, we get the work, and we've been doing this really ever since Brusk started the business all those years ago. We always gain new clients. New clients are really, really important to us. We never lose any. An interesting one is a Hill Group preferred supplier list, is that they're Future Build's biggest customer. We're now on their preferred supplier list for blue collar. So this is how cross-selling can work. And we talked about USP, the first USP that we talked about was cross-selling. Well, we've got another couple as well. So 1,600 guys on site at the moment, guys and girls. There are some girls. We've got 2 apps. We're digitally enabled. I think Bruce said it right at the start. So we've got an app that people who can go onto the app at any time. They register themselves. They upload their qualifications, their experience, their CV, where they live, etc. And what we do is that we then have access to all the jobs that's coming up in their area, and we try and match local people for local jobs with the right skills and the right experience. And this is really, really successful. We've now got 15,800, in fact, I think it's broached 16,000 now, people who have registered on that app. It was 12,000 at the same time last year. We've not really done any marketing or advertising to get them on there. That's word of mouth, social media, etc. They're just signing up with us. So, because why would they do it? Well, they want to find out where their next job is, because in construction, one job's going to end. Where's your next one? You need some help. This is what helps them. We've also got another app which is called the One Team app, which is onboarding is a big thing in a lot of companies, but very big for us because you have to have the right to work, modern slavery, passports, everything you have to do before you can get people onto a site. And it's now all digital. A year or 2 ago, we're having to move paper around the country and people to sign documents. We've managed to get out of that. We think we're ahead of our competitors in this space because nobody else seems to be doing it the way that we're doing it. So that's a big USP for us. Finally, we talked about the Construction Academy. It's a bit like vertical integration, really. In construction, you can't just train somebody and then they're trained for life. Every 3 to 4 years, their qualification has to be renewed. That costs money. So why would we do it ourselves? Well, we can do it cheaper and we can do it better than going to third parties. And that's why we set the Construction Academy up. But it's not just for ourselves. We're offering services to educational establishments and to competitors, clients, etc. So that's another 2 USPs as well as the cross-selling. Civil projects is basically where we do fixed price or cost plus contracts for the water industry. We've increased our revenue by 12% in the year, which is great, and delivered 43 projects in 2024, which is the most successful year ever for the amount of projects that we completed. We work with the asset management program. Those of you who are familiar with it will know that AMP7 expires in March of this year, and then AMP8 takes over for another 5 years. There was 5-year cycles. It was 51 billion in AMP7, and it's going to be 104 billion in AMP8. So there's going to be an awful lot of work. So we have to be very careful that we pick the best jobs, one that we can do well, lowest risk, highest profit. We're well on the way, so if we did 17 million in 2024, at the end of the 3 months of December, we'd already got 7.5 million pounds worth of projects that will be completed in 2025 are already in the bag. So we're very confident that we'll at least match that, if not beat it, in the year ahead. Again, always gaining new clients, never losing them. All the water companies we work with, all via subcontractors. Balance sheet for frustrated accountants. This is a straightforward balance sheet, really, other than worth pointing out that we're in the middle of a divestment process of a small part of our business, so we have to show the liabilities and the assets held for sale separately. You can see the benefit to the business of doing the divestment, because the debt will come down from 11.4 to 1 million, and the lease liabilities down from 5.6 to 4.4. So that was really to make our balance sheet look incredibly healthier, ready for the next stage of our growth, which, as Brusk will talk more about, is acquisitions. Excuse me, cash flow. We've had a great year with cash. Ooh, too fast. We've had a great year with cash. We generated 7.5 million in the year, as against 3.3 in the previous year. How did we do that? Well, a year ago, we were in a situation where the likes of HS2, and probably some other customers as well, were still quite new. It was a JV. JVs don't get their act together straight away, and they certainly didn't. And therefore, trying to get paid and to get QSs to sign off timesheets and so forth was really hard. But we've got our act together, got all our commercial teams to work with the key people within our clients to make sure that this turns around. And boy, has it turned around. We've now got HS2, which is a fairly large amount of money coming in all the time. We know to the day when they're going to pay us. It's a fantastic result. So, yeah, we won't generate that sort of money every year, because some of that was a catch-up. But it's a great result, and it's the challenge to us now is to maintain that control. Acquisition was 1.4 million, was the future build acquisition Brusk referred to. That's the equity raise, the 8 million. We only got 5.8 in the year to September. The rest came in October. We paid the dividends, etc. And you can see at the bottom there, the discontinued operations, the cash flow that went out of the business. That's one of the reasons that we're divesting ourselves of that. The next dividend is due. We would pay the interim dividend last year in March. Final dividend we paid in August. We're about to pay the interim dividend in March of 2025. Over to you.
Thank you, Paul. I'm conscious about the time, 3 minutes, so I'm sure I can rush this. We again started this year really well. Fantastic start of this year. Strong momentum has continued across all of our divisions into this year. Current number of people, 1,600 people we employ on site. So we have never had that many people in the past. So it shows that we are going to have another record year this 2025 year also. Infrastructure remains really busy with £750 billion investment earmarked across all of our main markets. Nuclear energy and power and energy distribution, rail, highways and water sectors are some of those. Next AMP, as Paul said, AMP8 spending in the water sector is going to be £104 billion over the next 5 years, more than double the £51 billion investment in the AMP7. So we will be twice as busy over the next 5 years comparison to the last 5 years for the AMP7. Network Rail CP7 investment plans representing £44 billion investment into the rail network was from last April onwards. So over the next 5 years, again, I mentioned that we have established our rail division over a year ago, and we are in the right place to maximize our opportunities. One last bullet point, as you might have heard from the news, UK government committed major infrastructure projects throughout 2025 and beyond, including further investment in nuclear energy, such as Sizewell C in Ipswich and Wilpha in Wales, alongside with net zero carbon capture projects and power and energy distribution in the UK. On top of this, last week you might have heard from our Chancellor, third runway in Heathrow as well as other lower Thames crossing possibly coming up as well. 9 reservoirs, super reservoirs to be built, as well as other network, rail networks to be built as well. So as you can see from the list, there's huge investment coming in the UK, and it's already exists, but it's going to be supercharged, and we are in the right place, and we believe we'll be growing. This is my last slide. I'll be very, very quick. It won't take more than a minute. As you can see from this slide, we've got multiple growth opportunities. M&A is our top of our priority. We got the money in the account now, in our bank account, and we want to go and acquire other labor supply businesses in the infrastructure sector where we are not operating, and they are nuclear energy, power and energy distribution, as well as rail projects. So we are looking for different size of opportunities, up to £10 million turnover, and specialist labor suppliers, which are up to 20-30% gross profit margins. And at the same time, we are looking up to £100 million turnover companies with similar to our sort of our profit margins. With regards to organic growth, as I mentioned, we've got a strong pipeline of projects for 2025, and we'll be growing in the 2025. Nuclear energy, £20 billion committed spend on Sizewell, and we already started working on this project, and it's going to be a huge ramp up coming up in order to finish that project. So we'll be working there for the next 15 years on this project, which is amazing. With regards to power and energy distribution, UK government committed to provide energy security in the UK. So that means creating the energy, but also distribution. One of the Balfour Beatty, one of our clients told me that they are going to be building the pylons. The amount of pylons over the next 5 years is the same amount that is being built since the electricity got invented in the UK. So huge ramp up in order to not only create the energy, but get that to the houses, get the energy to the businesses. Just one last point, sorry, I'm rushing. Only 10 years ago, we were a £7 million turnover company. Now 102 million pounds, and all the organic growth, apart from the 1.5 million pounds that we mentioned coming from the acquisition opportunities. So being on the AIM platform, working for our blue chip clients, as well as huge investments coming in the UK infrastructure sector, we believe that we are well placed to become a 500 million pound turnover company with 25 million pound EBITDA within 5 years. We call it within ourselves, within the group, a road to 500, and we are going to work hard to achieve that. So thank you so much.
Thank you very much indeed. Thank you.
Thank you.
Okay, that's terrific. Thank you very much indeed for the presentations. Okay, a question down the front here first, please, Chris. A lot of questions. This gentleman here first, please, Chris. This chap here. Thank you. Thank you.
I am from the construction industry, want to invest in you, but my concern is that your clients like Balfour Beatty, they have core resources. When there's a boom, they use people like you to expand what is available for them to use. And when there's a downturn, they shrink, they don't lose their shirt. Whereas companies like you can make a lot of money when there's a boom. When there's a bust in the construction industry, you tend to lose your shirt first. So how do you avoid that?
Sure.
Do you keep some fat somewhere?
Yes, great question. So thank you for that. With regards to our clients such as Balfour Beatty, Godefroy, Tryson, they normally specialize in management of the projects. So they don't carry very many people doing the work, if it makes sense. So as you saw our growth, we have been growing every year. Apart from the COVID, it had to drop, but picked up. So they always need people to kind of go and do the work, and that's ground workers, all the trades people. So they don't carry all of them. It's not what they are good at is not employing people, not becoming a sort of labor supply company, but they are good at managing the jobs. They are good at delivering the work, supervision side of it. So we believe that we'll be growing with the infrastructure investments over the next 10 plus years, organically anyway.
I think it's also worth pointing out that you mentioned the whole industry. But construction in particular, as against infrastructure, has got that history of going up and down, boom and bust. But we don't really work in the construction industry, we work in the infrastructure sector, which is far more stable, and particularly you can see the growth has been committed to both by the previous government, and this government's going to do the same as well. So that's why we don't have the same risk of boom and bust as people in construction would have.
We don't build houses, as Paul said, or commercial buildings, so we just concentrate on infrastructure work. Thank you.
Well, that was that was the second of two great presentations this evening, and a very impressive achievement.
Thank you.
I'd just be interested in your thoughts about joining the two together. What impact has AI had on your business so far, and what impact do you think it might have in the future?
Sure, I think it's a great question. I'm an engineer, I'm a civil engineer, and I love the development. I was so impressed by Polar Capital's presentation as well. It is helping in the construction industry. It is making, AI started being introduced into the businesses. It's creating health and safety assessments, method statements, all of those sort of health and safety plans that huge burden to the engineers, etc. So it's cutting the sort of time for engineers to be engineers, etc. But within our business, because we've got the app that we kind of developed and IP rights belong to us, we are going to be introducing AI in the future to give the data analytics for us. We want to be analyzing the data that we are getting. The other great thing that we have got as well, we started introducing a bit of AI to it in order to give our clients, not where the tradesmen are in the area, say there's a project coming up in Birmingham area, we can show the trade skills in the area, but we can also show what is missing, skill shortage in the area. So our clients can concentrate on upskilling the workforce in the local area by using our construction academy, and that is a huge thing. So we started analyzing the data. It's helping us, the AI, but we will be pushing more over the next few years. So
Question at the back, and then we'll come down to the front.
Just a quick question, actually, on the end of the government spending period. I think, what did you call it?
Is that AMP?
The
water.
Yeah. I think there is another company called Renew, I think, on AIM list,
Sure.
AIM company, and I think they issued a profit warning. They partly blamed it on this lull in the government spending. Are you affected at all by that at all?
So we are not affected at all by it. So I know, so sorry, I mean, it's just a bit of difference. So in the gold rush, in America, so I kind of make it a bit sort of similar sort of thing. In the gold rush, a lot of people who were looking for gold, they gone bust. They didn't sort of make it. But the people who made money were the people who were producing the shovels, right? So we produce the shovels, basically. We don't like physically, but we kind of provide the people to do the work. We don't get affected by it. We don't sort of carry very much, sort of assets, etc. And we are very flexible, and huge skill shortage, 250,000 people required over the next 5 years. So we'll keep supplying and growing within the infrastructure sector.
Question down the front.
Why are all these big projects in this country all badly managed? So why are companies like HS2 always calling for more money but never achieve what they're supposed to be doing? There's been lots of House of Commons complaints about
Sure.
the inefficiency of infrastructure projects, and also a lot of the infrastructure companies are not profitable.
Yeah.
So could you explain what's gone wrong?
Sure. Have you got 5 hours? So great question. So I will start with the first one. Okay, Crossrail got criticized a lot, being spending lots of money and overspending, and there are a few reasons for it. The system is really bureaucratic to get the planning permissions, and also We have got high standards in the UK, health and safety, environment, so we need to all meet those criteria. When I say me but not, I'm talking about our clients, and also the main sort of HS2s and Crossrails. So it just delays, and especially with the inflation as well over the last few years, and the COVID and Brexit, all of that I think added on to the sort of mixture a bit. So that's my sort of short answer for that. But with regards to the if you look at the Crossrail Elizabeth line, right? How amazing it is at the moment to be able to go from Canary Wharf to Reading in a short space of time. And no one is talking about the Crossrail overspend anymore because it's contributing to the economy, it's employing a lot of people, and it's making people's life easy. So rather than, I think, we concentrate so much at the moment, on when a project starts, we go really, really negative a bit, if it makes sense. And I think when you look at other cities, say Dubai or other countries, Saudi Arabia, what they are trying to do, I think if we don't push these projects and champion them, we will have a huge brain drain going and building those projects over there. Then the people won't be contributing to the current because it's tax-free over there if they go. And we've got a huge, amazing people here, amazing managers, amazing workforce here. We don't want them leaving the country, and we want them to contributing and building these projects. So hopefully there are sort of plans to kind of make it a bit more streamlined. But I agree. Sorry, what was the second part of it?
Yes, it was about really the nuclear has taken so long to fulfil its purpose, isn't it? It's always...
we are behind with the nuclear energy because we haven't invested in nuclear energy. We are not in the top 10 as a developed country because we have seen with Chernobyl, with those things, we have seen in the UK as a dangerous way of producing energy, if it makes sense. And we haven't invested until now. So we are a bit behind the curve. So a huge investment is coming because of that for us to catch up, if it makes sense.
But the numbers are astounding for nuclear, aren't they?
Nuclear and also renewable as well. So we are catching up with that.
Yeah.
Thank you.
Other questions, please? Gentleman here. Yep. Thanks, Chris.
Thank you for a very interesting presentation.
Thank you.
I think your biggest asset is your workforce. What I'd like clarification on is that the candidates who come through the apprentice scheme will obviously have the required resources, skills, but those who actually sign up locally on the app, how do you verify their competence, their skills?
Yes.
And secondly, is there a conflict if you require staff for your internal projects compared with servicing the needs of other companies?
Yeah, great question again. So thank you so much. So our app that we developed, you can take a photo of your qualification, your certification, you can put it there, and then we verify it accordingly by using sort of CSC, sort of card. And we want to automate it as well. So that's another thing about the AI, but that's going to take another year or so. So we do cross-reference. We check that before we send people. We check the references. So within a sort of half a day, a person can start on site, which is great. Second part, please. Sorry.
That was where.
Sorry, that
That one was on. I'll make it up. This one was on. You've effectively got no 0 hours contract for people on the app.
Yes.
How do you ensure that they'll be available when you need them? And I've remembered it now. The third part, sorry.
Yes. Okay.
Was very quickly. If you've got the internal
yes,
work,
sure.
how do you prioritise whether the external contracts get?
Perfect. I think it's brilliant. With internally, we only specialize in the water sector. We don't do anything outside the water sector. We have been doing it for the last 17 years. So. But where we sort of, look at it, if it makes, it's only the small part of our business when you look at 16, 17 million pound turnover, that side of it. So we need to be able to, meet the demand from our clients. We work in the southern part with the water. We only work in the southern part of it. So. But with regards to labor supply, we work all over the UK. So that doesn't sort of, give us a sort of conflict.
And some of the people that we have on the water projects, because most of those are self-employed, and what we do with them, if there's ever a little bit of a in-between jobs, and then there's always work in labour supply. So we move them over to labour supply. So it works. This is where the cross-selling works. The cross-supply of people works very well as well.
Okay, just a couple of quickies. One here, and then I think we're done.
Thank you very much for the great presentation.
Thank you.
My question is about competition. How would you describe the competition on the market? please?
Yeah, sure.
Who are your main competitors and what is your competitive advantage?
Yeah.
And another question is about what is your market share?
Sure. So that's, again, great questions. With regards to our competition, the competitors that we work with for our clients, they are mainly 30, 40 years old companies. And father started and passed it down to daughter or the son. And it does seem like same things are happening. There's no innovation, there's no introduction of technology, there's no sort of hunger to grow. They are growing because the sector is growing, but we are growing as you saw the numbers. We are sort of turbocharged at the moment, and we want to keep that momentum. And being on the AIM market as well, we want to go and acquire other companies in order to grow. So that is the first part of it. And again, I forgot
the competitors. The competitors. What we would describe as lifestyle companies. They're run that way because the owners are doing very well out of it. But we're the only one who's in the public markets.
Yes,
so we've got shareholders and people like yourselves to consider, and we're doing that for them. It's quite different, quite a different model.
Yes,
and market share, I think, was the final.
So with regards to the market share, again, there's huge market within the, as you saw, 750 billion pound investment. At least there is a 20-25% to be spent on the manpower of that. So when you look at it, there's huge market, and our turnover is 100 million pounds. So we want to be 500 million pounds in 5 years, and we will be sort of gaining market share, not only through organically, but also we want to be acquiring other companies as well.
But we don't actually know what the size of the market. There's no statistics that we get.
But that we can get access 25% of the.
That's the best that we can do, I think, in terms of getting that number. Yeah.
Okay. Yes, please.
Thank you for letting me raise the last question. On the balance sheet 2024, you've got cash of 6 million in round numbers.
Sure.
And then it says assets for sale 11 million. And finally, national insurance goes up in April, despite the lady in charge, Rachel Reeves, saying it wasn't. If you've got fixed price contracts, what's the impact on those especially? Thank you.
I can answer it. Well, Paul, I think
okay.
as the CFO. So
okay, well, the balance sheet, as I mentioned when we were on the balance sheet slide, that's the nature of accounting in public companies. If you're divesting a business, you have to show, but you haven't completed the sale yet, you show assets for resale and liabilities for resale. So that's why they were shown like that. Got nothing to do with the cash in the business at all. In relation to the national insurance, the premise of your question was quite right. In the labour supply market, all those national insurance costs that the lovely Rachel Reeves has passed on to us all, they will get passed on to our customers, because that's the nature of the contracts that we've got. The only hit that we would take to the national insurance increases would be people like Brusk and myself and our internal people in the head office who we don't recharge out. That is a cost, but it's relatively minor, the increase for that amount of people in our business, so that's not of concern to us, unless she wants to start doing even more along those lines.
Okay, well, gentlemen, thank you very much indeed. Thanks for joining us.
Thank you.